So good morning, sir. So I hope in yesterday we completed total KE calculation, right? So today we want to learn the concept of cost of rate and earnings. The last one, why? Because we completed KD first, KP, KR, KE, no, KD, KT. Small formula I written now. KT, KP, next KE, now KR, the last source. Understand clearly, ma? When it come to student are doing mistake in cost of capital only at the time of calculating KR. Remaining all are easy only. Maximum they will give redeemable things. Redeemable KD, redeemable KP they will give. As well KE dividend model they will give. Term loan you already know what are the rate into 1 minus tax, that's it. But when come to the KR point of view only, students are doing mistake. Why they are doing mistake means simple, ma. Three way of calculations is there related into the KR. Now simply if there is a no flotation cost and personal tax, there is a no flotation cost and personal tax. What is a flotation cost? Underwriting commission. What is meant by personal tax? This point I already explained. Tax are three types here: corporate or business tax, dividend distribution tax, personal tax. Now business tax or corporate tax affecting the KD. 1 minus 2 we record na, that one. Next, when it comes to dividend distribution tax, alternative formula is set for KP calculation, dividend distribution tax. The third one, personal tax, it will impact your KE. But the point, equity shareholders will not affect, retained earnings holders, shareholders is there na, they are affected. That's why that personal tax impact I will not expressed in KE calculation. The only impacts on KR calculation. Clear? Sir, if there is a no flotation cost, okay, personal tax completed now. Flotation cost means underwriting commission. When you pay underwriting commission? When you are paying underwriting commission? If your company sold shares in the public, no one will show interest to purchase. But when come to the return earnings point of view, you are not selling anything, na? Return earnings point of view, are you selling any securities? What are you doing? You are just using the company funds. Now tell me, that flotation cost will be there in retained earnings? No. But the flotation cost is there in KE calculation. Guys, clear? Are you understand the difference? Now the point you have to understand, if there is a no underwriting commission personal tax, KE is nothing but KR. KE is nothing but KR. But if there is a flotation cost and personal tax, KE not equals to KR. This is the point you have to understand. Now when come to the calculation of KR, you have to check personal taxes are not there. Next, flotation costs are not there. You have to check these two things. Are you guys clear? If there is a no two concepts, common sense is what, ma? What are the KE calculation you did? D1 divided by P0 plus growth. That is the answer reflected in KR also. Are you okay now? Now, concept number 5, huh? What is the concept number 5? Estimating cost of retained earnings. It denoted with what, ma? KR. Now when it come to the KD point of view, what is your checking point first? Now you have to KD. You have to check that a debenture is redeemable or irredeemable. Yes or no? No. KB point of view, same logic. Redeemable or irredeemable. KT point of view, there is no check. Just consider the percentage, multiply with 1 minus tax. When it comes to KE point of view, you have to check CAPM, dividend, earning, realized yield. These are the things you have to check. When it comes to the KR point of view, you have to check flotation cost and personal tax is there or not. You have to check first. Flotation cost personal tax. Yes, as well, no. Yes, as well, no. What is meant by yes? If there is a flotation cost and personal tax, that is called yes. If it is a yes, KR not equal to KE. Are you agree for this? Why? Because personal tax will affect as well flotation cost also affect. But when it come to if there is a no flotation cost on personal tax, KR is nothing but KE answer. What are the calculation you did for KE? That answer will be taken as a KR also. Are you okay now? Now when it come to here, only flotation cost is given. Only personal tax is given. Both. Now see the calculation properly. KE not equals to KR. Are you agree, ma? Okay. Now, can I write like this? T1 divided by P0 minus flotation cost plus growth for KE calculation. Yes or no, na? Generally, how you calculate KE with growth dividend model? Expected dividend divided by P0 minus flotation cost plus growth only, na? Now, when it come to KR, T1 divided by P0 plus growth. Now tell me, both calculation will give same answer, huh? Why? Why? Denominator will affect, na? Denominator will be affect or not, ma? But why you consider KE point of view FC, KR point of view, why not consider FC? There is a no flotation cost. There is a no concept of flotation cost when it come to KR. That's why that both answers are not same. KR answer, KE answer is different. KR answer is different. Hope you guys clear. Any doubt on this? This is the exam model. This is the exam model. Clear, na? Next, when it come to ma, only personal tax is given. KR not equals to KE. Are you agree for this? Why? Because there is a personal tax. Who will liable for personal tax? Shareholder. In equity shares point of view or retained earnings point of view? Retained earnings point of view only. That's why KR equals to what are the KE you already calculated into 1 minus TP. Into 1 minus TP. Guys, clear? So already 10% expected by equity shareholder. Out of the 10%, 30% need to be paid as a tax, personal tax. It means 10% is not a KR. 10% into 70% is a KR. That's why KE is different, KR is different. Guys, clear? Okay, then fine. So there is a concept of both will be give. Both will be give. So clear, so? Do you understand the KR concept? When this entire bullshit concept will become means if there is a flotation cost and personal tax. If there is a no flotation and personal tax, what is the consequences? K is nothing but KR. Clear, Nana? Now open illustration number 14. Cancel the answer what I provided in the material, ma. That is a wrong answer, wrong calculation. Now what is the right calculation? See, AKS Limited retains 10 lakh out of its current earnings. The expected rate of return to the shareholders if they had invested in the funds elsewhere is 10%. Now already they are expecting how much, ma? 10%. That is called KE. That is called KE. Now the brokerage is 2% and the shareholders came in 30% tax bracket. So see here, shareholders are came. Shareholders are came means corporate tax, personal tax. Shareholders means whom tax? Personal tax. Now flotation cost percentage is given as well as what, ma? Personal tax is given. Now what is the formula for KE? Cost of retained earnings. KR equals to already expectation KE. 1 minus TP into 1 minus brokerage. Now what is the expectation? 0.1. Out of that they will give only 30% or 70%? 70%. 1 minus 30%, 1 minus 0.3 means 70% into 0.7. Out of that value into, you have to pay brokerage, na? How much? 2%. If you pay 2%, you will get only 98% into 0.98. How much, ma? 0.0686. Answer 6.86%. Simple, ma. 10 rupees they are expecting. Out of that 30% tax. If you pay tax, you will get only 70%, na? How much? 7%. On that 7% also you will get only 98%. They will cut 2% brokerage. If they cut 2% brokerage, out of 100% you will receive only 98%, na? That only I recorded here, 0.98. Now effectively retained earnings shareholders will receive how much? 6.86%, not 10%. Now KE is not equals to KR. Why? KE is what? 10%. KR 6.86%. That's why I said not equal. Are you okay? Now if there is a no personal tax, there is a no brokerage. At that time 10%. KR 10%, KE also 10%. Are you okay? Now dump this answer. So strike off it. Don't follow this calculation formula. Wrongly placed. Completed? Speed up, ma. 15 to how many problems is there? (15 to 28) means how many? 28 minus 15, 13. That 13 are 5-star rated. You will get one problem for 7 mark. From problem number 15 to 28, all are 5-star rated, all are exam models. So what are the things you learned up to 14? They are basic things for remaining problems. Clear, na? Okay, then fine. Each and every problem is important only, ma. 15 to 18. Trust me, you will get one question directly. Either you will get some direct concept, direct question, or sometimes model. They will change the values. You will get model also. Okay, na? Then fine. Now concept number 6, please listen. This is the exam standard concept. estimating overall cost of capital, or sometimes they are using a word called WAC, weighted average cost of capital, based on book value or our market value. Book value or our market value. Do you know the difference between book value and market value? What is the difference between book value and market value? What are the security value traded in the public market? That is called market price. What are the security value you recorded in your books of accounts as a face value? That is called book value. Guys, clear? So due to, if you security into book value per share, book value per security, you will get book value total. Number of securities into market price per security, you will get market value. So sometimes they will ask properly, I want a KO as per book value, I want a KO as per market value. Sometimes they will ask, I want KO as per both book value as well as market value. Sometimes question will be silent. If question will be silent, based on information you have to decide book value or market value. So if they are providing each and everything market value, the best option is market value. If they are not provided market values, if they are only focusing on book value, at that time assumption book value is a proper version. So if there is a no clarity, we have to decide only based on the information. Not you have to create assumption based on information only. Don't use own assumption. Clear na? Okay, then fine. So see the format. Sources. How many sources we have? How many sources we have? 5 sources. Equity share capital, retained earnings, preference share capital, debenture, term loan. Sir, this is a order as per balance sheet order. Equity share capital, retained earnings, preference share capital, debenture, term loan. Sometime in question they will shuffle the order. If you want, go with the as per question paper order. If you don't want that, follow the balance sheet order. Clear na? Next, you have to consider book value or market value. In which basis you are preparing the statement, you need to consider that. It shows in rupees. Now this total is known as capital employed. Total is known as what ma? Capital employed. In our example we discussed 100 crore rupees na. Now the 100 crore is known as capital employed. Out of 100 crores, what are the individual values? 20, 20, 20, 20 is there na. That are the amounts. Okay now? Then fine. After this calculation, you have to figure out weights. You have to figure out weights. Weight of equity, weight of retained earnings, weight of preference share capital, weight of debenture, weight of term loan. Now proof purpose, if you want to sum this entire weights, it will be 1. It will be 1. Now how you get this weights means, see here, weight of equity equals to equity share capital divided by capital employed. Equity share capital divided by capital employed. You will get weight of equity. Now as per our example, 20 CR na, 20 divided by 100. 0.2. 20 divided by 100. 0.2. Okay, then fine. Weight of retained earnings. Retained earnings amount divided by capital employed. Next, weight of preference. Preference share capital amount divided by capital employed. Next, weight of debentures. Debenture value divided by capital employed. Weight of term loan. Amount of term loan divided by capital employed. Now, every amount is 20 crore rupees only, na? For everyone, value 0.2. Some all 0.2s. Clear na? The common sense you have to apply. If I procure 1 rupee, out of that 1 rupee, 0.2 paise from equity share capital, 0.2 paise from retained earnings, 0.2 paise from preference shares, 0.2 paise from debenture, 0.25 from term loan. It will be vary based upon the amount. Based upon the amount. But ultimately it is equivalent to 1 rupee. If you consider rate, if you consider percentage, don't take 1 rupee, take 100%. 20%, 20%, 20%, 20%, 20%. 100 only, na? Clear, sir? Okay. From starting onwards, we are using rates only instead of percentages. Ultimate answer only, we are converting rate into percentage. Yes or no, ma? Same logic I am applying here. I am considering rate, not percentage. If you take percentage also, no problem. Next, ma. Specific cost of capital. What does the mean for specific cost of capital? KE calculation, KR calculation, KP calculation, KD calculation, KT calculation. I hope you know how to calculate KE, how to calculate KR, how to calculate KD, how to calculate KT. There is a concept we learned in previous classes. Are you guys clear? Now, the next one, product. That is nothing but weights into specific cost of capital. Weights into specific cost of capital. These two values multiplication. Are you clear? You will get weighted cost of equity, weighted cost of retained earnings, weighted cost of preference, weighted cost of debenture, weighted cost of term loan. The summation is nothing but weighted overall cost of capital. That is nothing but WACC. It is denoted with KO. Are you guys clear? Any complication format? If you know the format, you can easily answer the entire all questions. The only difficult task is specific cost of capital. Why? Because this book value, market value, they will give in the question paper. Just dumping the values and find out in the weights. The issue with what? Specific cost of capital as a working notes. Okay, now? Now another exam standard difficult point is there. Market value of equity. Market value of equity. Now one point you have to understand. Equity share capital is not equals to equity. Equity share capital is not equals to equity. Can anyone? Equity share capital is not equals to equity. Can anyone? Equity share capital is not equals to equity. Can anyone? I invested 1 crore rupees in MRF company. After 2 years, I am came from that company. Yes or no? If I am coming from the company, are you consider only capital? If I will ask profit share also. I will take only my investment money, or I will ask my profit share for these 2 years also. I invested 1 crore rupees in Reliance company ma. After 2 years, I'm quitting that company. If at the time of second year ending, third year beginning, I want my money. What money you want? Only capital you invested, or extra profit share also you want? Profit share also you want. Yes or no? Na? The day one you invested how much? 1 crore rupees. At the third year ending, how much you will receive? 1 crore or more than 1 crore? Why more than 1 crore? Capital plus profits. Now, equity share capital is nothing but just amount you invested. But when it comes to the equity means amount you invested plus profit share. That is nothing but returned earnings. In simple terms, reserves and surpluses. This will help you in your accounts also. Are you okay now? So amount you receive, what you invested is both are same? No. Amount what you received is called equity. Amount you invested is called capital. Are you okay now? Now see here what I wrote here, market value of equity. Market value of equity. Why I will explain later, just understand. Market value of equity equals to number of shares into market price per share, MPS. MPS full form what ma? Market price per share. Are you okay now? Okay, then fine. Market value of retained earnings. Market value of retained earnings is there? No. Day one I explained this. There is a no number of security, there is a no market value. When market value will come? If there is a number of securities only. That's why there is a no market value of retained earnings. That's why I included the retained earnings in equity value. That's why I included the retained earnings in which value ma? Equity value. Hope you guys clear? Okay, then fine. Next, market value of preference share capital is possible? Yes. Number of preference shares into market price. Which market price? Equity share market price. Preference market price. Preference share market price. Next. Market value of debenture is possible? Yes or no ma? Why? Because number of debentures is there, number of securities is there. Number of debentures into market price per debenture. Market price per debenture. Now what you will get, capital is known as market value of debt. What about the book value? They will give in the question paper. They will give in the question paper. This is the only thing you have to learn for market value calculation. Why? Because market values they will not give. They will give number of securities and market prices. With the help of that, you have to figure out market values. Are you okay? Now, what about the market value of term loan? No, that's why book value of term loan is nothing but market value of term loan. But when it comes to retained earnings point of view, that kind of assumption is not possible. That kind of assumption is not possible. Clear now? What are the securities and the shares you multiply? That is called what? Market value of equity, not market value of equity share capital. That's why you no need to consider retained earnings point. Directly, instead of these two, what you can write? Market value of what ma? Equity. Market value of equity. The only market value point of view only this complication will be arise. If it's a book value, you can consider individual equity share capital as a book value, individual retained earnings as a book value, individual preference share capital as a book value, individual debenture as a book value, individual term loan as a book value. The complication of market value of equity arises only when there is a market value related KO calculation. If it is a book value, no need to compile one thing. You can separately show equity share capital is different, retained earnings is different. Any complications here? అది క్లియర్. ఎప్పుడు మనకి ఆ రెండు ఒకటైపోతాయి, మార్కెట్ వాల్యూ టైంలో ఒకటైపోతాయి. నాన్న క్లియరా నాన్న? వై? బికాస్ ఇఫ్ యూ మల్టిప్లై విత్ నంబర్ ఆఫ్ షేర్స్ ఇంటూ మార్కెట్ ప్రైస్, యూ విల్ నాట్ గెట్ ఈక్విటీ షేర్ క్యాపిటల్, యూ విల్ గెట్ వాట్? ఈక్విటీ. నౌ వాట్ ఇస్ ద మీన్ ఫర్ ఈక్విటీ? ఈక్విటీ షేర్ క్యాపిటల్ ప్లస్ రిటర్న్ ఎర్నింగ్స్. That's the point. Hope you guys clear? And next when it come to I will explain at the time of problem. Why? Because another complication is there. Another complication, if I write market value of equity, I will consider KE, KR, both are same only, na? I will not multiply with one time KE, one time KR. I will multiply with only either one. Why? Because equity means KE plus KR. Are you guys clear? But when it come to if there is a flotation cost at the time, KE is different, KR is different. That's why I can't use commonly, na? Yes or no? That is another complication. When come to that kind of problem, I will explain again. Up to now, the problem is clear. Now, what is the difference between market value and book value? Means only calculation will be differ in equity and retained earnings point of view. If it is a book value, you can show separately. Equity share capital value separately, return value is separately. But when it come to market value, you can't show separately unless there is a flotation cost. That is the next adjustment. If there is no flotation cost, you can show simply market value of equity instead of two things. Are you okay? When you confuse outunara, when you come to the problems, you will get more clarity. Okay, sir? Then fine. Come to illustration number 15. The basic version problem. Now, okay. Now tell me, this one is difficult, KD calculation difficult? This one only difficult. Are you clear? So for day by day, you will get more clarity. Then what are the things you felt difficult in initial phase? That will be the basics for remaining problems. That's why I said you have to spend at least 15 to 20 minutes every day. So what is the general rule? If when come to the market value point of view, there is a no market value of equity share capital, market value of retained earnings. There is only concept called market value of equity. Are you okay? That is a general rule. It has some exception. What is the exception means? You have to show separately market value of equity share capital and market value of retained earnings. If K is not equals to KR. Sir, clear, sir? This logic only possible if there is a K equals to KR. Now when the split is happen, the next adjustment name is called split concept. What is meant by split? You have to separate that market value of equity into market value of equity share capital, market value of retained earnings. That is called split concept, exception. Okay, now completed. These points. Okay, then fine. Come to illustration number 15 ma. Everything is there in this book on question only ma. Nothing you have to calculate. But understanding only difficult task for student. Now see, while considering the most desirable capital structure of a company, so generally the word is there na, capital structure. That is our next concept. Next chapter, not concept, next chapter. On the chapter what we learn, we will discuss that chapter only. So as of now, capital structure means which proportion will give best to the company. So simple example, 100 crores is needed, 80 crores from equity share capital, 20 crores from debt. Yes or no? No? Option 1. Option 2, 50 crores from equity share capital, 50 crores from debt. Option 3, 20 crores from equity share capital, 80 crores from debt. Out of these three, which one is the best one? Which one is the best one? Why? Because example 1, 80% equity, 20% debt. Example 2, 50% equity, 50% debt. Third option, 20% equity, 80% debt. Out of these proportions, which is the best for the company? That is a chapter set by capital structure. Clear now? In this problem, they provided multiple proportions. Out of that multiple proportions, we have to say which one is the best. Now, sir, out of three, which one is the best one? In our examples, 80 equity, 20 debt, 50 equity, 50 debt, 20 equity, 80 debt. Out of these three proportions, which one is the best for an organization? 80 is to 20. Option 1. It depends upon the individual. Now, for option 1, I will say disadvantages. If 80% equity means your ownership will be dilute. Ownership will be dilute. Then you are not a owner. Public will be the owner. Yes or no? Na? Next, when it comes to the third option, 20% equity, ownership is not diluting, but debt is coming to the company, na, huge risk. Irrespective of profits, we have to pay interest, na, huge risk. Because of huge risk, this also not benefit for the company. When it comes to the 50% equity, 50% debt, moderate. Ownership point of view, I am not losing that much. Risk point of view, I am not losing that much. This is a theoretical explanation. But we can't say theoretically, we have to say with calculation. For the calculation purpose, first option, if you procure like that, KO is 12%. If you procure 20% equity, 80% equity, 20% debt, KO is what? If I calculate KO for that problem, KO is 12%. For second one, KO 13%. For third one, KO 14%. 12, 13, 14. Now as a company, what you want? Less cost of capital, more cost of capital. Less cost of capital. Now which one is the best option? So company need to procure. If you want money, please procure with 80% equity, 20% debt. Guys, clear? Huh? That is a concept we are applying here. It means out of how many plans? 1, 2, 3, 4, 5, 6. 6 or 7? 1, 2, 3, 4, 5, 6, 7. Out of 6 plans, which one is the best one? They are asking. How you say means you have to calculate KO for each and every one. For after KO calculation, where you will get a least KO, that is the best plan. Sir, clear, sir? Now how to calculate KO? How to calculate KO? The previous, just only you said na statement, but that statement is not possible for that problem. Shortcut is possible. Now, what happened here? What happened here? Weight of equity into cost of equity, yeah? Plus weight of retained earnings into cost of retained earnings, plus weight of preference into cost of preference, plus weight of debt into cost of data, plus weight of term loan into cost of term loan. Now sum of all this known as KO, what you said. Now can I write like this shortcut formula? KO equals to weight of equity into cost of equity plus weight of retained earnings into cost of retained earnings plus weight of preference into cost of preference plus weight of debt into cost of debt plus weight of term loan into cost of term loan. This is a shortcut formula. Sir, clear, sir? Sir, they not provided retained earnings, they not provided preference shares, they not provided term loan. Now what is KO, sir? So product of equity plus product of debt only, na? That is the concept we are applying, sir. Any complications here? Any doubts? Clear, na? Okay, then fine. See, cost of debt percentage is given. Can I name it is called KD? Now, please don't say like that. You have to check tax rate given or not in the question paper. If tax rate is given, what are the percentages? They said they are pre-tax. What you want for calculation? Post-tax. Are you okay? In this question, they not provided tax rate means the assumption is pre-tax is nothing but post-tax. That's why I am assuming it is a KD. Sir, clear, sir? Now when it comes to this is called KE. K is not there, KD is not, K is there, KD is there. What you want? Weight of equity you want and weight of debt you want. Sum you will get what, ma? KO. Are you okay now? Now see the question now. The following estimates of the cost of debt and equity capital after they specially mentioned. Because of the word after tax, we are considering KD. If it is not after tax, rate into 1 minus tax. Are you okay? Now this rate into 1 minus tax is not calculation. Why? Because they said after tax only. They already calculated. Okay. Have been made at a various levels of what mix? Debt equity mix. Out of this debt equity mix, which mix is the best for the organization? That is a capital structure concept. Okay, then fine. Seema. If you know the meaning of this sentence in English, problem is completed. See, debt as a percentage of total capital employed. Debt as a percentage of total capital employed. What is mean for that, ma? If 100% is always capital employed, on that they saying that debt percentages. Now these all are what percentages? Debt percentages. Now first point of view, debt plus equity equals to capital employed. Now 100% always capital employed. Now out of that debt how much percentage? 0%. What about the equity? What about the equity? 100%. Are you guys clear? If you want in rates, 0 is the weight of debt, 1 is the weight of equity. Next, 10% is the debt, total 100%. What about the equity? 90%. Now tell me in the rate point of view. 0.1 is debt, 0.9 is equity. I said, na, if you understand the sentence, the entire problem is completed. Now what about this plan? 20% debt, 80% equity, always capital employed, 100%. That's the point I said, 1 rupee. Total weights equals how much? 1 rupee. What about this? 30% debt, 70% equity, 100% capital employed. Here, 40%, 60%, 100%. 50%, 50%, 100%. 60, 40, 100. Now weights also there. Specific cost of also there. Now you can figure out KOs. Just with help of calculator also we can solve this one. Take your calculator. First one 15%. First one 15%. Why? 100% into 15%, 15% only. 1 into 15% also 15% only. Why? Because debt 0, na? Okay, then fine. When it comes to the second case, 0.1 into 0.07, M plus, first erase all memory, press MRC 2 times. Now first I am calculating product of debt. How? 0.1 into 0.07 M plus 0.9 into 0.15 M plus MRC into 100 you will get percentage. 14.2%. Sir, clear, sir? Next, third, 0.2 into 0.07. Now, every time remove the MRC, remove the memory. మళ్ళీ ఇది అయిపోయిన వెంటనే నువ్వు ఎంఆర్సీ 2 టైమ్స్ ప్రెస్ చేయాలంటే మళ్ళీ అవి కూడా సేవ్ అవుతాయి. సో 0.2 ఇంటూ 0.07 ఎం ప్లస్ 0.8 ఇంటూ 0.16 ఎం ప్లస్ ఎంఆర్సీ 14.2%. నెక్స్ట్ 0.3 ఇంటూ 0.08 ఎం ప్లస్ 0.7 into 0.17 M plus MRC 14.3%. 0.4 into 0.09 M plus 0.6 into 0.18 M plus MRC 14.4%. Again refresh. 0.5 into 0.1 M plus 0.5 into 0.21 M plus MRC. What Nana? 15.5%. Next 0.6 into 0.11 M plus 0.4 into 0.24 M plus MRC 16 point. Now out of this all, where is the least cost? 14.2. That means these two are best only. These two are best only. Now you have to say decision. The best debt equity mix is option 1 and option 2. So what about the option 1 says? If you want capital, procure with 10% debt, 90% equity. What option 2 says? If you want capital, 20% debt, 80% equity. Both are best only on basis of KO. This have multiple bases. EPS basis, MPS basis, lot of things is there. I will explain in capital structure. As of now, we are saying decision based on KO. Guys, clear? Now see ma. From the above table, evident that cost of capital is minimum at 2 levels. Option A, when equity is 90%, debt is 10%. Option B, when the equity is 80%, debt is 20%. Hence, either of the 2 levels may be. Clear now? For this, we have to do presentation. With the calculator also we can do, but that will not give marks. Okay, no? Then fine. Problem number? Sir, KP is not there, KR is not there, KT is not there. Is it correct? Yes, they provided only 2 sources. Very clear. Now another concept is there. Equity represent equity share capital plus retained earnings. Debt represent debenture plus term loan or bank loan. The only missing here preference share capital. Clear? సో మిస్ అయితే మనకేంటి ఇచ్చిన దానికి కేఓ ఫైవ్ అవుట్ చేస్తాం, లేని వాటిని 0 అనుకుంటాం. weights, specific cost of capital, product. Here also same, weights, specific cost of capital, product, and one more point you have to add KO. KO equals to product of equity plus product of debt. Okay. Now as per plan 1, what about the weight of equity, ma? So if you are confusing, change the order. First they provided debt information, you figure out that equity information. That's why just replace the words. Debt, equity. Now as per plan 1, what about the weight of equity, Nana? 0, na? 0. What about the specific cost of capital as per plan 1? Nil, given. If they given also, answer 0 only. 0 into anything, 0 only, no? What about the weight of equity, Nana? Out of 1 rupee, debt 0 means, what about the equity? 1 rupee. I am not using percentages, I am using rates. 1 rupee. Specific cost of capital 0.15. Now product also 0.15. Now what about the K1, Nana? 15% only, now. Next, plan 2, ra. Weight of debt, please. Percentage point of view 10%. Rate point of view 0.1. Specific cost of capital 0.07. Product, please. 0.007. 0.007. Now weights, weight of equity, Nana. Out of 1 rupee, 0.1. Debt means, what about the 0.9? Equity only. Why? Because the total weight will be 1. 0.9. What about the specific cost of capital of equity, Nana? 0.15. What about the product? 0.135. Now 0.07 plus 0.135. 14.2%. You can write 0.142 also, no problem. Clear? What about the plan 3, Nana? Weight 0.2, na? Plan 4 0.3. Plan 5 0.4. Plan 6 0.5. Plan 7 0.6. Now what about the weights of equities? 0.8, 0.7, 0.6, 0.5, 0.4. Now tell me the debt rates, ma. Plan 3 KD 0.07. Plan 4, plan 5, plan 6. Now what about the specific cost of equity for plan 1? Okay, next one is there 0.111, na? What about the equity specific cost of capital as per plan 3? Plan 4 16 again, 17. Plan 5, plan 6, plan 7. Now tell me the products. Boys do equity products, girls do debt products. Equity 0.128. Zero 0.0114. 0.119. 0.024. 0.108. 0.003. 0.03, 0.105, 0.05, 0.096, 0.066. KO, please. Boys, please calculate from down to up. Girls, please calculate from up to down. 14.2%. Last one. 16.2%. 14.3%. 14.4%. 15.5%. Fifth one correct ana? 14.4%. Sir, completed. Then read next question. If it completed, please read next question. Sir, completed, all of you. This note copying completed. Okay, then fine. When it come to illustration number 16, attempted question only. A Limited has the following capital structure. So what's it mean for capital structure? What are the proportions that are used in the capital procurement, that is called capital structure format. Now what are the format they used ma? Equity share capital, 12% preference share capital, retained earnings, 14% debenture, 14% term loan. All 5 sources they are procured ma. Now see, equity share capital 10 lakh shares ma. Amount of capital 100 lakhs. Okay. 12% preference share capital 10,000 shares. Amount 10 lakhs. Retained earnings amount 120 lakhs. Next 14% debentures 70,000 debentures 70 rupees 70 lakhs. 14% term loan 100 lakhs. Total capital they procured ma. That is called book values ma. That is called what? Book values. Why? Because in top also they not mentioned. Top also they not mentioned. What are the values they given in the question paper? They are all are book values. Let us come to the additional points what they said. The market price per equity share is 25 rupees. The next expected dividend per share is 2. What is the 2? What about the 25? What about the 25? P0. Now the next expected dividend means D0 or D1. Now growth rate. Which model it is? Dividend with growth model. How to calculate KE? P1 divided by P0 plus. Hope you guys clear. Any doubt on this? Okay. Next point B. The preference shares are redeemable means I already said you have to write the formula first. Now N7 is nothing but N na? So preference shares are redeemable after 7 years at par is nothing but face value only no. Now here shares is there, capital is there. Capital divided by number of shares you will get per share value. 10 lakhs divided by 10,000. 100 rupees. Even if there is a no clue, I said assumption. 100 rupees only no. At par. Repayment value equals to par 100 rupees. Are currently quoted at 75. Can I name this called P0? As per formula, preference dividend, there is a no dividend distribution tax. Preference dividend plus repayment value minus net proceeds or market price. Net proceeds is there. Huh? What is there? Market price is there. Instead of net proceeds, go with the market price. Any complications? Easy only, no? Okay, then fine. Debentures are redeemable after N at this also be 100 rupees. If you want, check here. 70 lakhs divided by 70,000 debentures, you will get per share book value. 100 rupees, huh? Okay. And their current market quotation is P0. Now interest 1 minus tax plus repayment value minus net proceeds or market price. Which one here? Market price is there. Any complication here also? The tax rate applicable to the firm. I said already 3 types of taxes is there. Organization taxation, dividend distribution taxation, personal taxation. This is the tax rate we are using for. We are using for KD calculation, not KP, not KR. Hope you guys clear. Another point. They not specified KT, they not specified KR. Here I will get KE ma, here I will get KP ma, here I will get KD. I want KR, KT also. But common sense we are applying. KT there is a not difficult calculation. 14% into 1 minus tax only. What about the KR? What about the KR? Now the point you have to check. Flotation cost personal tax is there or not? Is not there. If it is not there, KR is nothing but all subject points covered up except that split. Now the word split only came if KE not equals to KR. Here KE equals to KR now, you need not to split. You need not to split. Now okay, I understand. I have to figure out KO only. I have to figure out KO only. On which basis? On which basis? On which basis? On which basis? Book values is there, market values is there. You can take your own assumption. Are you guys clear? But when it comes to the board book, they solved both. Book value point of view as well as market value point of view. Are you okay? Now, I will explain the concept of split. What does it mean for split? When the word split will come, K not equals to KR. Are you okay? Now, what does it mean for split? Number of shares into market price per share, you will get market value of equity, not market value of equity share capital. What you will get for market value of equity you will get. Now, you have to split this into market value of equity share capital and market value of retained earnings. This is called split. Are you clear na? ఇదో 10 లక్షలు ఉంది నాన్న. ఓకే, ఈ 10 లక్షల్లో 8 లక్షలు ఇది, 2 లక్షలు ఇది. దీన్ని ఎలా స్ప్లిట్ చేస్తున్నాం అనేది కాన్సెప్ట్ని స్ప్లిట్ అంటాం. ఆర్ యు ఓకే? నౌ how we will split means market value of equity into book value of equity share capital divided by book value of equity. Book value of equity share capital divided by book value of equity. This is called proportion. So we will split market value of equity on book value proportion. Book value proportion. Now you know book value of equity share capital. What about this book value of equity? How we get book value of equity? Book value of equity share capital plus book value of retained earnings is known as book value of equity. Both are available in the question paper. Are you guys clear? Now how to calculate market value of equity? How to calculate market value of equity? Number of shares into market price. That also available in that question only, na? Sir, clear, sir? So split is very, very important. If KE equal to KR, KR not equals to KE, please go with the split concept. Please go with the split concept. Why? I will give clarity later. But split is important. Are you okay, sir? Okay, then fine. Now how to calculate this market value of retained earnings, ma? Market value of retained earnings. Yeah. Out of total market value of equity, I want only retained earnings share. Book value of retained earnings divided by book value of equity. Clear? Then you will get what, ma? Market value of equity share capital, market value of retained earnings. Are you okay? Generally, these names not there in material, ma. For understanding purpose only, I created these names. Split concept. Are you okay? There is no split concept in the material. The process will be split only, na. That's why I added that name for catchiness. Split concept. Number of shares into market price per share. All students will think that what, ma? Number of shares into MPS, we will get market value of equity share capital. But what is the reality? You will get market value of equity. That's the point student need to learn. So if you get only market value of equity share capital, means the common sense, book value of retained earnings is nothing but market value. But what MPS says, MPS includes share value plus profit value. Share value plus profit value. Share plus profit is nothing but equity value. That's why MPS into number of shares, that equity share capital converted into equity value. Now market value of equity. Guys, clear? Now what is meant by split here? Out of that market value of equity, I want market value of equity share capital proportion amount, market value of retained earning amount. Market value of equity into book value proportions. That is a split concept. Market value of equity into book value proportions. Tell me, ma, how you get market value of equity share capital? Market value of equity share capital equals to market value of equity into book value of equity share capital divided by book value of equity. Now the book value of equity means what, ma? Equity share capital plus retained earnings. Book value of equity share capital plus book value of retained earnings is known as book value of equity. Now how you get this market value of retained earnings share, ma? Market value of retained earnings equals to market value of equity into book value of retained earnings divided by book value of equity. Clear? Clear, Nana? Problem number? For this problem, I will show both information in single format. For some more problems, if split concept is when is needed, that is nothing but if there is a k not equal to kr, at the time I will show differently. Book value k over different calculation, market value different calculation. But for this problem, I will show both are in same format. Why? Because we are splitting two. We are splitting two. Now when it come to observe estimating weighted average cost of capital based on book value and market value. Out of the book value statement and market value statement, two are common. Sources are common, specific cost of capital is common. Yes or no, ma? Specific cost of capital will be changed, huh? No, either book value point of view or the working note you did, that will be reflected. In market point of view, market value point of view also same will be reflected. That's a common thing. Sources, specific cost of capital. Are you guys clear? Next, book value market value book value weights market value weights book value product market value product. Now please tell me the sources first. Equity share capital as per their order. Preference share capital, no, you have to mention that percentage. 12% preference share capital, retained earnings, 14% debentures, what Nana? 14% term loan. Now I think values already there, na? So in top use the word amount in lakhs. Now what about the book value, Nana? What about the book values of equity share capital? 100 lakhs, 10 lakhs, 120 lakhs, 70 lakhs, 100 lakhs. Total 400 lakhs. Now can I name it is called capital employed, ma? With help of this column, can I figure out book value of weights? Book value of weights. How you get book value of weights? Book value of equity share capital divided by book value of capital employed. How much? 100 divided by 400. 0.25. 10 divided by 400. 0.025. 0.3. 0.175. 0.25. Now just proof purpose, don't add all, don't post 1 rupee, just proof purpose only. If you add all, the proof is 1. Check it once. Clear now? What is the mean for that proportions? If I procure 400 crore, 400 lakhs rupees, out of 400, 25% equity, 2.5% preference, 30% retained earnings, 17.5% debenture, 25% term loan. Clear now? Now, if you want to book value of product, you need to figure out specific cost of capital. For this purpose, you have to do working note. So what about the working note, ma? Calculation of cost of equity. K equals to D1 divided by P0 plus growth. Now please, D1 please, 2 divided by 25, growth 0.08. Answer 0.16 for 16%. I consider rates now. That's why percentage also I need to convert as a rate. What about the KE mod 0.16? 0.16. What next? Preference shares, huh? calculating cost of preference share capital KP. Now I think redeemable preference shares, KP equals to preference dividend plus repayment value minus market price. So you can use MPS or you can use P0, no problem. But you know the meaning of that, na? What is the meaning? Market price. Divided by n number of years. Repayment value plus market price divided by 2. I said you have to present PD means what, RB means what, and their calculations. But I will show only calculation part here. PD represent preference dividend, 12% of face value. That is nothing but 12 rupees. Yes or no, sir? Next, RV represent repayment value. They said at par. Par is nothing but face value, 100. Next, MP0. Why? Because there is a no net proceed concept. Their sells at market price only. MP0 equals to 75. N equals to number of years, that is equal to 7 years. Now 12 plus 100 minus 75 divided by 7. 100 plus 75 divided by 2. What about the box answer? 100 minus 75 divided by 7? 3.5. What about the average value? 100 plus 75 divided by 2. 87.5. 12 plus 3.5 divided by 87.5. 0.17 over 17%. 17.178, 1779, they round out with 178 over 17.8%. What next? Here calculation, calculating cost of retained earnings, that is nothing but KR. K is nothing but KR, that is nothing but 16%. Next, calculating cost of debentures, cost of redeemable debentures. KD equals to interest 1 minus tax plus repayment value minus market price divided by n number of years whole divided by average of repayment value and market price. Now procure the information. I represent interest. How much percentage? 14% of face value, 14 rupees. T represent tax rate given in the question paper, 50%, 0.5. Repayment at this one also para, face value 100, market price 90, n number of years, that's it. 14 into 1 minus 0.5 plus 100 minus 90 divided by 6 whole divided by average. Seven plus 1.6 bar double 67 divided by average value 80 95 answer 0.09 exactly 12 or 9.12%. Okay, after point consider three numbers with a round off with fourth one. More than 5 add 1, up to 5 consider that number only. Sir, clear sir? 0.091. What about K team? Calculating cost of term loan. KT equals to interest 1 minus tax. So interest on face value only na 14. That is nothing but 14 rupees. 0.14 into 1 minus 0.5. 0.07 over 7%. Now you know specific cost of capital and book value of aids. If you multiply the two, you will get what ma? Book value of product. Please tell me the book value of product ma? 0.16 into 0.25. 0.04. 0.178 into 0.025. 0.0044. 0.16 into 0.3. 0.0. 0.091 into 0.1750. 159. 0.070 into 0.25. 175. Total piece 0. Total please. Zero point 12 or 12.58%. Correct na? .12. Debenture calculation wrong here. 8.25% is the wrong one ma. They consider entire things rightly, but they drafted answer wrongly. The answer here 9.12%. Because of the gap only the differences came. 12 is common, but after 12 the gap came because of wrong answer in textbook. Sir, clear sir? You can observe entire things are they taken right only. 14 into 1 minus tax plus repayment value minus values also same only, but they wrongly consider a calculation part. Sir, okay na sir? Okay, then fine. Now how to calculate market values? Can I dump what are the values given in the question paper? No, we have to figure out na. How you get market value? So market value of equity share capital will not get directly. Why? Because number of shares into market price is known as what? Market value of equity. You have to split. You have to split. Now market value number of equity shares into market price per share, that equals to what you will get market value of equity. Now please tell me the number of shares. 10 lakh shares. Per share 25. Answer 250 lakhs. 250 lakhs. Now what is the 250 lakhs? Equity share capital or retained earnings? Equity share capital or retained earnings? Both, known as equity. Are you guys clear? Now I want equity share capital portion, retained earnings portion. Now market value of equity share capital equals to market value of equity into book value of equity share capital divided by book value of equity. Now when it come to what about the market value of equity, you already calculated 250 lakhs. Now what about the book value of equity share capital given in the question paper? What ma? 100 lakhs. 100 lakhs. What about the book value of equity ma? 100 lakhs plus 120 lakhs. Why 100 plus 120? Equity share capital plus retained earning is known as equity. See the formula clearly. I recorded numerator book value of equity share capital, denominator book value of equity. Now answer. 250 into 100 divided by 220. 113.6 bar. What ma? 63 what bar? 3 bar. 6363. Then 113.64. I will round off with that debt retained earnings value. Are you okay? Now how to calculate market value of retained earnings? I am use common sense. Out of 250, if I remove 130 or 113.636, pending is nothing but what? Are you guys clear? Or what is the calculation part also there? What is the calculation part? Market value of equity into book value of retained earnings divided by book value of equity. 250 lakhs into 120 divided by 220 lakhs. Answer 136.36 bar. 3636. Sir, clear sir? Now ORR market value of retained earnings equals to market value of equity minus market value of equity share capital. 250 lakhs minus 113.6364 lakhs. Answer 136.3636. Clear sir? Now you have to post these values here. What about the equity share capital? 113.6364. What about this retained earnings? 136.3636. Are you okay? Next, market value of preference share capital. Number of preference shares into market price. What about the number of preference shares? Preference shares. 10,000 preference shares into 75. Answer? 750 lakhs or 7.5 lakhs? 7,50,000. It means 7.5 lakhs only, no? 7.5 lakhs. Now what about the debenture? Market value of debentures equals to number of debentures into market price. Number of debentures, please. 70,000 per debenture. 90. Answer? 63 lakhs. What about term loan book value, market value? There is a no calculation part. Market value of term loan is nothing but book value of term loan. Answer? 100 lakhs, huh? Now please tell me the total. 250 plus 7.5 plus 63 plus 100. One minute, ma. 4. 420.5 lakhs. Now for this 420.5 lakhs, you have to calculate weights. Now please tell me the weights. .0. Equity share capital equity 0.27. Preference share capital 7.5 divided by 420.5. 0.0178. Return earnings. What, Nana? 0.324. What about debenture, Nana? 0.1498. What about the term loan? 2.3. Sometime total will not 1 sometime it will be 0.99 or 0.9 bar, 0.98. Don't worry about that decimals. Okay. Next, market value of product, please. Zero point 4.3%. Market value of product mass specific cost of capital into market value weight. 0.32. What next? Zero point 32. What next? Zero point 0.518. 0.091 into 0.1498. 0.0136, 0.070 into 0.2378, 0.0166. Summation please. Zero point 1284 for our 12.84%. This is a way to calculate book value KO, market value KO. Sir, clear, sir? So why the split concept only we are using? If there is a KO, KE not equal to KO, I will explain tomorrow. But my suggestion, if KE equal to KR or KE not equal to KR, go with the split concept. For every problem, go with the split concept. The split concept came when? Market value point of view only. In book value point of view, there is no split. As well, if there is a no written in the question paper, there is a no split concept. Sir, clear, sir? Okay. Refer this problem tomorrow. So I will give some more clarity about this split concept. But as of now, do you understand the split concept? So when it comes to number of shares into market price, we are not getting market value of equity share capital, we will get market value of equity. But I want market value of equity share capital portion, market value of return earning portion. For that I am using book value proportions to split the equity value into market value of equity share capital, market value of return earnings. Okay? Thank you. So this is the last YouTube class ma. After this, no YouTube live. Remaining 5 classes will come from